and welcome back to yet another exciting week of the Lazy Money Game. In this week's episode, we're going to look closer at the new broker that I have decided to go with while I'm waiting for Revolut to potentially get their trading license in Ireland, and why I have to adapt my strategy to the new broker since it will otherwise be way too costly for me. Then I'm going to show why I have decided to invest in the company, which I have done within this week, and finally I will give a portfolio update as well. So, without further hesitation, let's go and take a closer look at the new broker which I have decided to go with. So the new broker that I'm using, they have a minimum fee of $13 per trade, which I'm doing. And then since I have made a US dollar account, I will have to pay an exchange fee of 0.15% every time I have to convert my Danish kroner into US dollars. Because if you're not making a US dollar account, then you will have to pay 0.5% in fee, and that is actually quite costly. Because not only will it hurt you whenever you have to transfer new money into the account and investing it, but it will also hurt a dividend growth investor like me, because all the dividends I would receive would come in as US dollars and be converted back to Danish kroner, and then I would have to convert them back into US dollar before I could reinvest them. So for me, I really needed to have a US dollar account without paying too much for having the US dollar account. And just to put some numbers on why I have to adapt my trading strategy, so far this year I have done 117 trades on Revolut, and with a fee of $13 per trade, that would be equivalent to $1,521 in fee. On top of that, I would also have had to pay an exchange fee of 0.15% of my over a little more than $100,000 which I have exchanged this year, giving that an additional fee of $150, and converting that into Danish, that's more than 10,000 kroner that I would have paid in fee if I had followed the same trading strategy on my new broker. Hence, I need to adapt my strategy and trade much less frequently, but doing larger trades instead. And just to illustrate as well why I chose to go with Revolut in the first place, the fee that I have been paying on Revolut this year so far is $1,000 to have a metal subscription for a full year, and then 12 times whatever I have had in my investment account, and that is roughly $0.50 I have paid in fee per month, meaning that I have paid around 1,037 kroner in fees for Revolut. So here you can see it is actually 10 times cheaper to do the strategy that I have done on Revolut than what I will be allowed to do on my new broker. So that really shows why it was so interesting for me to begin with Revolut in the first place, and why I really need to adapt my strategy when I decide to go with a new broker. And just to put a name on the stockbroker that I have decided to go with, it is called Nordnet, and for the 11th time it has been awarded Stockbroker of the Year by the Danish Stockholder Association members. So why did I choose this broker instead of a lot of other different Danish brokers? Well, first of all, I can get a US dollar account for free. That is really important for me, since I am going to receive a lot of my dividends in US dollars, and most of my trading is done in US dollars. So not paying anything for having an account, that sounds quite tempting to me. Unfortunately, I have to adjust my trading strategy because I need to trade much less. And just to illustrate, I will actually put some numbers on that as well. So the first thing we do is we convert the Danish amount in kroner into US dollars for using Revolut for a full year. In my case, that is roughly $166. That means that I will have to do less than 13 trades on this broker for it to make sense. And this is actually without paying the exchange fee. And you can see up here that I actually paid an exchange fee of $150. So that means if this broker should be cheaper for me to use, I could actually only do one trade within a single year to have paid less than I have done on Revolut. So the freedom I'm giving up to use this new broker instead of Revolut is really a lot. So now that we have established that I really need to lower my trading frequency, then perhaps it's time to do another price comparison, because of course I have looked to other Danish brokers or Scandinavian brokers to see if there was something in the market that was better suited for my strategy. I happened to find another Danish broker where I could also get a US dollar account for free. But if I want to trade as little as possible to minimize my fees, that broker had an exchange fee of 0.5%, but their trading fee was only $3. That means if I'm trading trades for $3,000, then it will still be cheaper to use the broker that I have decided to go with. So we can see here that if you take 3,000 and then you times it by 0.15% and then add the $13 in minimum, and you do the same over here, then it's very obvious that it is cheaper to go with the broker that I'm choosing to go with, as long as my trades are at least $3,000 large. So I know that this was probably not the broker that you would have thought of that I was going to go with, and perhaps this will upset some of you, but I mean, currently this thing about losing my right to complaint is something that I take quite seriously. And then the other thing we saw last week, that you weren't informed about corporate actions, that is simply just unprofessional to me, and then I have to accept the fact that I will pay something to get a better service. So I know that I have only compared two brokers here, and maybe some of you are sitting and saying, well, that is actually not really giving a fair chance. Have you only investigated two brokers? And the simple answer to that question from my side is no. I have actually investigated a lot of brokers, but since there was only these two, which would allow me to have a US dollar trading account without having to pay a huge fee to have the account, then that narrowed down the search to these two. But it was actually quite hard and quite time consuming to figure out whether or not you were allowed to have a US dollar trading account in this process. And before I get the question, well, haven't you just considered using Revolut to exchange the currency and then transfer your money from Revolut into the new broker and then paying this low trading fee instead? Well, technically that is not possible, because none of these brokers accept receiving US dollars from Revolut. They are not obliged to do so, because then they will miss this exchange fee. Hence they have decided not to receive money from Revolut in US dollars. In fact, I can only transfer money from a Danish bank into the broker that I have decided to go with. And the next thing is, even if it was possible, Revolut has tried to close this gap, since they this year has announced it's only the first currency transfer you do which will be for free. Otherwise you will have to pay a fee of 25 Danish kroner to transfer your money from Revolut into a Danish bank if it is not in Danish kroner, meaning if I want to transfer US dollars, then I will have to pay a fee. So even if it was technically possible, it will actually still incur a fee. So I actually have this pros and cons list which I made. So the cons are that it is obviously more expensive. I have to change my strategy, otherwise it will be way too expensive. And it actually concerns me that less people will have access to start investing, because my whole reasoning for starting this YouTube is to show that investing is not just for rich people. You will eventually become rich if you start investing and you do it in the right way. And the pros is, in my case, that I will have access to a broader market, because now I'm not limited to the 800 and something stocks that Revolut offers. I will have automatic tax reporting, since my broker will now report that directly for me. I feel much more secure, since if I have cash with this broker, they are actually covered by the European Union, so up to 100,000 euros in cash are covered. And something as simple as that I can actually call them and ask questions in case I have something like that is actually really positive for me as well. So that was a lot about why I have decided to go with a new broker and why I have decided to go with that particular one. I know this is not an option for a lot of you, so I'm sorry, but your case or your situation is very different from mine, and you also might view things very differently than I do. Maybe you don't think it is a big issue that you can't file a complaint to the FOS, but you have to use Bank of Lithuania instead, and you are happy with that, and then you can continue using Revolut. But Currently, I will not sell out of all my stocks in Revolut, as I have mentioned earlier, due to all those tax implications. So currently, I'm simply just waiting to see what will happen, and then I have to do something else in the meantime. And while we are speaking of what I have to do, I have actually used this broad market access to add a new stock into my portfolio. And I'm happy to announce that the first investment I have done with my new broker went into Store Capital, which is short for single tenant operational real estate. I will of course include links in the description below, both to the webpage and to some good interviews with Volk, the CEO of Store Capital. But before we look closer at the company, let's see how they actually fit with my guidelines. So firstly, a yield above 3%. Secondly, a dividend forward yield above the 4-year historical average yield. Thirdly, a PE lower or in line with peers. Fourthly, a payout ratio less than 75%. Fifth, diversity across sectors. Sixth, good dividend history. And seventh, strong company potential and a good moat. So if we start by going to Seeking Alpha and pick the dividends tab, we can see here that Store Capital pays a dividend which is way above the 3%. We also note that the payout ratio is above the 75%. This is because Store Capital is a real estate investment trust, or simply just called a REIT. They have to pay out at least 90% of their net earnings in order to qualify for being a REIT. If we then go and take a look at the dividend yield and compare it to the 4-year average, then we can see that unfortunately I'm buying below the 4-year historical average, but I still think that 4.3% is close enough for me. Unfortunately, I could have gone a much better deal if I had bought in March, because there I would have received a yield of 9.2%, but anything was good to buy back in March this year. If we then continue to the dividend history, then we can see that they have increased their dividends time and time again. So they have had an increasing dividend history for the last 5 consecutive years, as can be seen here. You can also take a look at the dividend growth rate and see that it has actually been growing quite nicely. If we then continue to check whether or not the PE is in line with its peers, well, first of all, it doesn't make sense to take a PE when we are talking about real estate investment trusts. There, a much better measure would be funds from operations, so price to FFO. So if we go to the summary tab here, we can see that the price to FFO is 18.24. So I would have liked to see that being around 15, but unfortunately that is not the case. So I'm paying on a little higher end, I know that. So if we take a look at the peers here, you cannot go down, and of course you can find the PE ratio, but I don't think it's will give you too much, because I don't think PE ratios is a good measure to use for real estate investment trusts. But if you were to use a PE, you can see that they are somewhat in line with their peers. They are not the cheapest one, but they are definitely not the most expensive one either. If we then look to guideline number 5, diversity across sectors, well, then we can see that there has been a big swing in my portfolio since I have done this investment. So now real estate is covering 16.8% of my entire portfolio. So I'm definitely more diversified than I was before this purchase. So from that perspective, it really suits this portfolio. And finally, we arrive at strong company potential and a good moat. What Store Capital is doing is, in my opinion, a really well-run business. I will show you the numbers here, just so you can see it for yourself. But what is really convincing me that Store Capital is a good investment for me is, if we go to macro trends and look up Store Capital, go to the financial page, their income statement, take a look at the growth in their gross profit from 2012. Every year it's simply and steadily growing, and it's actually growing quite nicely. You can also take a look at their operating expenses and see, sure, they are also growing, but they are growing at a rate where they are still continue to increase their profit. So this is really what you'd like to see when you invest in a company. They make money and they continue to make money. Of course, I know that there would be people who would be saying, well, if you look at their basic shares outstanding, that number is also increasing, and you would like to see that number decrease. Well, when you're talking about real estate investment trust, they issue shares to buy a new property, so it's not an issue for me to see this, as long as I'm looking at this graph, because I can see that the basic earnings per share is going up as well. So despite the fact that they're getting more shares out, they are still increasing the revenue on each of those shares, which are outstanding. So no issue there at all for me either. So this was just to give you a short introduction of some of the financial numbers and a little teaser for this strong company potential and a good mode. I mean, if you really want to dig more into this, I highly recommend that you watch the video in the description down below. It's an interview for almost an hour with Volk, the CEO of the company. I mean, that is definitely a business that I want to own a piece of. The only thing that I regret is that I didn't buy it back in March. So now that I have given an update to why I've decided to go with the broker that I have, and my reasons behind it, and my reasons behind adding this new company into the portfolio, namely Store Capital, we can go and take a closer look at my portfolio. So the first thing we immediately notice is that there is a green circle for this week's episode, meaning that my portfolio is up in value. Next, we can see that the cost has actually increased by close to $8,000 compared to last week, and that is of course because I have decided to add almost $8,000 into Store Capital. I actually invested Friday in this company, and since it was Black Friday, my new broker actually decided to waive all their fees for the purchases you did in US stocks. So I was happy to save $13 for the purchase there. So if we go and take a closer look at the portfolio value, we can see that it has increased by $12,300. Of course, we have to subtract the $8,000 which I have invested, meaning that my portfolio is actually up $4,300 compared to last week, and that is actually pretty good. But that is nothing against the excitement that I see when I see the dividends tab, because for the first time I have now breached $300 within a single month. $300 which I didn't have to work for. I mean, it's amazing. And I know that the month has not yet ended, so I will receive one more dividend. Unfortunately, it is from my smallest dividend payer, meaning Starbucks, and they are only paying a little more than $2. But what is really interesting for me to see here is, on average this year, I have made this number divided by 11, meaning $165 on average. But what is truly amazing is, with all the stocks that I have in my portfolio currently, meaning this number divided by 12, next year I will receive close to $60 more on average than what I have received this year, before I start adding more into the portfolio. This is truly amazing to me. And just as an added bonus, my latest purchase of Store Capital, which pays out dividends every quarter, actually pays out in October, meaning that I have now added a huge chunk of dividends into those months where I'm currently quite below. And just to illustrate how much I'm going to receive from Store Capital, I have done this calculation. So my 239 stocks, which I have paid close to $8,000 for, they pay a dividend of 36 cents every quarter. That gives me a yearly dividend of $344, but after withholding tax we're down to $292, meaning that every quarter I'm receiving $73 more. So I'm actually more than doubling the dividend that I'm receiving from October and July. So this just goes to even out the portfolio, which is a pretty nice bonus as well. So that actually concludes yet another exciting week of the Lazy Money Game. So now you have seen the new broker and why I have decided to go with that particular one, my first purchase there, and the update to my portfolio, where I was happy to share that for the first time ever I have reached the $300 mark in dividends received within one single month. So if you enjoy content like this, then please consider giving me a like, add a comment down below, or consider subscribing. It really helps out the channel a lot. And until I see you next Sunday, bye!